Hi, I'm Sarah. I'm part of the ITRO Trading Tools team. Today we'll talk about the first 100 days of Donald Trump's second term. During the first 100 days of his second term, U.S. financial markets have gone through one of their most turbulent periods in decades. Stocks have lost more than 7%, representing the worst start to an administration since Gerald Ford took office 50 years ago. The Standard & Poor's 500 index, one of Wall Street's main stock market indicators, has fallen 7.2% since Trump's inauguration day. The main reason? An aggressive trade agenda that has sparked uncertainty and fear among investors. Since January, and as is well known, the White House has launched a series of tariff announcements against numerous countries. These reciprocal tariffs, as Trump calls them, seek to protect American industry. However, the impact on financial markets has been exactly the opposite. Investors have interpreted these measures as a direct threat to global trade. At the same time, they fear a spike in inflation caused by higher import prices. The result? Volatility, falling prices, and capital flight. J.P. Morgan's strategist David Kelly put it bluntly, "We've decided to fight all the kids in the playground at the same time. And the consequence is clear. The market is no longer confident that the United States can win this fight with the rest of the world." The consequences have not been long in coming. More than 10 of the country's leading investment banks have cut their projections for the Standard & Poor's 500 through the end of the year. And foreign investors, who held a record 18% stake in U.S. stocks at the start of the year, have sold some $60 billion in shares since March. Technology companies, which once led the market, have also taken a severe hit. Companies like Tesla, Alphabet, Nvidia, and Meta went from being investor favorites to being the target of bets against them. Furthermore, the emergence of a Chinese artificial intelligence firm called DeepSeek, promising cheaper models than those in Silicon Valley, further fueled uncertainty in the sector. What's most striking is that Trump himself seems to ignore the negative impact these policies have had on the markets. According to analysts, his administration is apparently being evaluated not on its economic results, but on its faithfulness to his campaign promises. According to Thierry Wisman, global strategist at Macquarie, Trump can call his first 100 days a success, simply because he did what he said he would do. But for the markets, the story has been very different. Chaos, mistrust, and an uncertain path that is testing the strength of the U.S. economy. Join ITRO and transform your investments into sustainable success.